Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 4th. I'm Eric Wilkinson. You very well may recognize me as the Wolfman, though, from mainstream media where I've talked about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I go a little bit further and talk about option strategies I'm implementing into my portfolio on any given day. We are also doing webinars for you folks out there, showing you guys a streamlined pathway or roadmap to finding the optimal option strategy for any given assumption. We aren't just picking out an option strategy out of the hat, trying to find an underlying to fit that option strategy, nor are we just with a bullish assumption saying you need to go out and buy calls. That's not what we are doing here at Pro Trader Strategies. We look at these underlyings, we look at what's going on around the pricing, and then discern what is the best strategy for those assumptions. So please check those out. They're very easy, streamlined roadmap. If volatility is high, you take a right. If volatility is left or low, you go left. All right, it's kind of that easy. All right. Without further ado, let's get on with the economic data and see what's going on in the markets. Across the pond, Great Britain, construction PMI coming in. Remember, Purchasing Managers Index. Construction PMI coming in at 49.2, expected to be 53. Not only did they miss, it's the first time since June since we've seen this number go below 50. And remember, PMI numbers, anything above 50 is expansion, anything below 50 is contraction in the economy. That is showing contraction the first time since June of 2020. Then we go on to, continuing to stay in Great Britain. Bank of England kept interest rates unchanged. And finally, we got the United States unemployment claims coming in at 779,000, expected to be 828,000. They did revise last month's number down as well by about 35,000. So good to see on that front. Heading into tomorrow's non-farm payroll, those are things we're going to be looking at as to give us a little bit of insight as to how those numbers are going to come out. Looking pretty good at this point from across, all of the unemployment numbers that we've been seeing heading into this number. So it would be a real surprise if that number came in worse than expected. All right, non-farm payroll productivity coming in at negative 4.8%. That is better than the expected, negative 2.9%, and a revision to last month's number as well. Labor cost increasing. That's showing demand for the laborer, and they are able to garner a higher wage, which is something that is probably not normal for this type of environment where there's a lot of people unemployed, people clamoring to get that job, willing to accept a lower pay rate. Well, we're not seeing that show up in the preliminary labor costs here in the United States, coming in at 6.8%, expected to be 4.1%. Factory orders higher than expected at 1.1%, expected to be 0.7%, and they revised last month's number up by 0.3%. Finally, we got the natural gas storages in line with expectations at 192 billion cubic feet. Keep in mind, natural gas prices have been rising with this whole fracking issue, crude oil driving higher, as we can see here, only up 14 cents. But yesterday and the last 3 days, really this entire week, all we've seen is movement to the upside from basically trading at the low 50s to the mid 50s. So a nice move to the upside if you are a bull in crude oil. Now for me, you guys know my position on this. I mean, I don't have an actual quote unquote position in this, but my viewpoint on crude oil being as high as it is that will cause a slightly slowing of velocity of money as more and more people spend that money towards the gasoline rather than other places in the economy. Gold futures falling out of bed. Now, I am long GLD in both my IRA and in my portfolio. These are hedges for a correction in the market. Now, I didn't expect really to see us fall into the 1700s here in gold futures. And remember, I have on GLD, so it's not exactly the same as this, but I'm long the 175 calls in the March for GLD. That obviously not doing very well today, but I'm going to leave those on because if there is a massive correction, there is going to be a flight to quality, that usually being something like gold futures. So this is a total hedge for a correction in the overall markets there. All right, bonds coming off back below this Fibonacci line that we were talking about. It lines up with 167.17. We're at 167.15 right now, so only a couple of ticks below that. Now, I talked about the last few days. This is a solid bottom. We found support there. Right now, we are below that support level, but a finish above that is going to make a very nice bottom with a hangman doji at the bottom there. It is going to look like the market wants to correct to the upside. Now, finishing below or near the lows is going to make this look very bearish, where interest rates are likely to start moving higher relatively quickly, sooner than later. It feels like if that's going to happen. All right, VIX coming off, in the equities, what do you expect? They're higher on the day. Dow Jones Industrial Average 260 points higher on the day, breaking this pattern where yesterday it did at the end of the day start making it look like a little bit of a top with that candle there, and today blasting off to the upside, so the confirmation is broken. And here with the NASDAQ, although they did finish lower on the day, making that topping pattern kind of look like we are looking for a correction here. Well, today, the market really not giving us anything. There's no confirmation at this point, and a finish near the highs of the day would make this look like a continuation pattern for you folks that are trying to read the tea leaves out there. Again, similar situation here in the E-mini S&Ps. Not confirmed at this point. As a matter of fact, we are higher right now than we were yesterday, so that has broken that pattern, especially if we get a settlement up here. Now, a settlement right around the open, that's going to start creating this another topping pattern the way that the chart's set up right now. Now, a finish, we're just going to really have to look at this candle today because it could go a lot of different ways, and maybe even wait till tomorrow for a confirmation of these chart pattern setups, because right now they really could go both ways, to be honest. All right. E-mini S&Ps pretty flat overnight. Today, coming into the day session, decent economic data, right? Especially heading into tomorrow's non-farm payroll. So the market's celebrating that and moving to the upside. More strength than weakness there. All right, GME, GameStop. Can't stop talking about the GameStop. Well, I got out of right after, it was pretty close to right after the daily market commentary yesterday. I got out of the remaining balance of my GME puts. Remember, I did this all on a volatility spike. I was just trying to take advantage of volatility, not the direction. Remember, the market was moving so fast, they weren't releasing calls fast enough to try and sell those for a bearish move. The market was moving higher. I sold puts to take advantage of that volatility. We saw the volatility. It was a beautiful representation of how volatility can offset a directional move. Well, we got that move higher massively, and my puts never decreased in value because the volatility did start to expand. We are below that implied volatility number that where I originally got into this. Plus, we have some theta decay going on because I got into these in the February, which expire on the 19th of the month. So in 15 days, 2 weeks. So a lot of theta coming in to play here, where it's really eroding at those premiums. So with that being said, if you guys remember, I got into these puts, selling the February 25 puts in there for originally, where did I sell those February 25 puts? For $2.57. That's it. And then I was able to cover those on the 2nd, so 2 days ago, covered some of them for $1.33, and then yesterday I covered the balance for $1.42. So out of the GME trade that I was working yesterday, I just wanted to make sure you guys were clear of that. And then Penn came out with numbers. All right, well, let's talk about EA Sports. EA Sports, I did this for an earnings call as well, if you guys remember, and yesterday was not able to get out of those because the market was, obviously moving to the downside. But you can see I got the directional move way wrong, but we did note that this was going to act as support, and it's right there at around 160 or 138.63 ish, or 138.50, let's call it anyway. And yesterday we did come down and test that. It happened to line up with the 50-day simple moving average there, though, and got a bounce up and away from that, which was right back to the point of control in EA Sports. So all of those things coming into play with this trade when we were talking about it. And I went into the February weeklies that expire tomorrow, sold the 138 puts in there for 91 cents, was able to cover those today for 38 cents. And that was off of a little bit of bounce on the open. I put that in there before the open even happened and got filled about maybe 10 minutes after the open or so. So out of my EA Sports as well for that earnings trade. Nice little profit on that one. I wasn't able to get out for quite as well as I'd like to, but I got the directionality wrong. Volatility, we took advantage of. So, man, that move right in my face still made money. I love stuff like that, you guys. Seriously. All right, and finally, PENN. We got PENN here where they missed on earnings pretty significantly. As you can see here, 21 cents expected, came in at 7 cents actual, and the market a little bit of sell-off there, but on the earnings call, pretty bullish, and the market really took off. Plus, I mean, Portnoy is a marketing genius, and people jump on board with that all the time, it seems like. So, with that being said, they just had earnings. I do expect some volatility to continue to come out of this, and I went into the February monthlies that are going to expire in 19 days, I believe. 15 days, sorry, 2 weeks. We just talked about that, Wolfman, Eric. The February expire in 15 days. Decided to do some covered calls with the volatility still elevated early this morning. I was able to sell those 140 calls in there for 93 cents. So total cover call on these PENN stock that I have been owning since $4.49. Yes, $4. I said that correctly, $4.49. And I have lowered my overall cost basis on this trade quite dramatically over the course of me owning this trade or owning this stock. I've lowered my overall cost basis on this for probably close to $2 and maybe right around $2.50. So lowered my overall cost basis by over half. This being another dollar, I haven't even added into that, excuse me. But if I can get out at 140 in the next 15 days, I would definitely take that $25 move to the, $25 move to the upside in this trade. So just staying mechanical, lowering overall cost basis, trying to increase that spread width from where I bought it to where I would be willing to sell it. I've continued to do that all the way from basically 90. I sold the 90 calls earlier, sold the 120 calls, and so that's right around $2.50, $2, let's call it. And then I sold some, so that's it. The 120 calls and then the 90 calls on that. So lowering my overall cost basis by just over $2 on that. And then again with this trade at the 140 call, trying to sell those for a covered call trade. All right, that's all I've got for you guys. Today we're working on a webinar. It is going to be on the long call diagonal. All right, we did the calendar. Now we're going to a diagonal. I'll tell you what the nuances are and the difference in these two, because they are very similar, and we kind of want to do these for an earnings setup for next go around. So if we're doing that, we can take advantage of all the levers and pulleys going on in the market. Heavy theta decay in the front month, volatility expansion in those back months. That's how we're going to play these earnings trades going forward. And I'll show you how to do that today at just after the close of the open market. So please go to protraderstrategies.com and sign up for that. Also, if you like my daily market commentaries, give me a thumbs up, share it with a friend, comment if you have anything that you are looking at, you want to talk about, strategy may be going against you, any of those things, please reach out to me in the comment section down there. I'll be happy to go back and forth with you to make sure you're clear of concept before going forward. And finally, make sure you understand there are risks involved in trading, so please take a moment to go over this disclaimer. It is becoming more and more apparent that the SEC is going to be clamping down on people because of this whole GME thing, the Reddit stuff, the Wall Street bets. Those guys could be giving recommendations And that's why I don't give recommendations, because I don't know the suitability for you. And that's a very important key thing going on here, especially in the markets with newer traders and things of that nature, where they were buying this GameStop on margin, and they are probably on margin calls where they don't know where they're coming up with the money. And that can become a very major issue. That's why I try and talk about some of those nuances here in the daily market commentaries, and especially delve into those in the webinars. So please check out those webinars, as we have different content that we're giving you guys in there, where we're more specifically drilling down on these option strategies so that you know what you're getting yourselves into. All right, that's all I got for you guys. I hope everybody has a great one, and I'll see you after the close. If you can't take that, take it easy.